Hello? Can everyone hear me? Is the mic working? Help. It's working? The mic is working? It's now working. Can everyone hear me? Awesome. Good afternoon. Welcome and thank you all for being here. My name is Jane Doko and I'm the Assistant Vice President for Policy Studies in the Community Development and Policy Studies Division at the Federal Reserve Bank of Chicago. That was a mouthful. I'm a PhD economist, and so what I do in my spare time is write papers that nobody reads. And so I am thrilled to be here to welcome you to experience an issue that I've studied closely, namely how households access credit through a very different medium. Our work in community development and policy studies and our research aims to advance the economic mobility and resilience of low and moderate income households in underserved neighborhoods. And an important part of our work is to analyze how difficulties accessing credit have implications for families' economic and financial security. I'm hopeful that the work and research discussed here today will spur even more research on the racial wealth gap and broaden our collective understanding of the interventions and policies that are necessary to strengthen upward mobility in an equitable manner. As part of the hosting committee at the bank, I'm also supposed to inform you of where the restrooms are. They're out the doors and by the elevators. I'm also supposed to advise you that in the event of a fire, you should exit the building in an orderly manner. But I don't know how that would exactly work, so let's just hope that we stay safe. I think next on the agenda is Bruce, who's going to have a lot more to say about what's to come. Thanks.
Thank you, Jane. Thank you. Well, good afternoon. Welcome. My name is Bruce Ornstein. I'm a community organizer who worked with the IAF and the Gamaliel Foundation. I went on to found the Chicago Video Project and ran that for about 20 years. About 10 years ago, I left Chicago to go to North Carolina, where I teach at Duke University, and now work at the Samuel Du Bois Cook Center on Social Equity. So I am very, very pleased, though, to be back in Chicago. So hello, Chicago. Good to see you again. I think it's exciting to see all this interest in this history, and I know that the people who are here today are working to address this history in so many different ways, improving quality of life, whether it be in schools, housing, economic conditions, jobs, whatever it may be. The people in this room, I'm glad to be in association with you and honored to be among you. As Jane, since we're dealing with history, as James Baldwin reminded us, the great force of history comes from the fact that we carry it within us, all right? Are unconsciously controlled by it in many ways, and history is literally present in all that we do. And I think that is going to be something of a central theme for us today. He wrote those words in 1965 in an era when Chicago history we are here to delve into, when Chicago history we're here to delve into, so that we no longer have to be unconsciously controlled by it. But before we get in the program, I've got a long list, well, not a terribly long list, but a list of thank yous. And I want to express, first of all, my deep gratitude to the Federal Reserve Bank of Chicago for hosting this event and for its deep commitment to the bank's public mission. Thank you, Jane, for your warm welcome. A very, very special thanks to Gar Kelly, the Federal Reserve Community Development Director, who deftly shepherded this event from the get-go. And I really, really appreciate it, Gar. Thank you. I also want to offer my deep appreciation and thanks to the funders of this event, the UIC Institute for Policy and Civic Engagement, the Pierce Family Foundation, Polk Brothers Foundation, the Staines Family Foundation, and the Wiebold Foundation. I want to thank our partners in research, Janet Smith from the Natalie P. Voorhees Center for Neighborhood and Community Improvement at UIC Chicago, and Laura Nussbaum from the Public Policy Research Collaborative at Roosevelt University. And finally, most importantly, an individual, actually, we all have to thank for his inspiration for the study and report, and the fact that we're even here to discuss this issue today. And you'll be hearing from him on the panel later on, and his name is Jack McNamara, for those who know him. Oh, I guess you know Jack, huh? Well, I know Jack a lot better than I did before, and who's, organizer extraordinaire, and I wanted to get this line out, and a lifelong warrior for justice. So there are many more people to thank, and everybody along the speaking path here will be thanking additional people. But I want to say a few more words before we get going. You all have the program. As you see, we will present the research, screen the film, which puts a human and screen the film, which puts a human face on the research. And then we hope to have a searching discussion with you on how to put the history to work for recognition that is long, long overdue. With that, I want to introduce Deborah Bennett, the Senior Program Officer for the Polk Brothers Foundation, who is well known for her vision and commitment to racial equity and justice in Chicago. Deborah will offer a few opening remarks, and we'll get the program underway. Deborah, thank you.
Thank you, Bruce. Good afternoon. The mission of the Polk Brothers Foundation is to ensure that all Chicagoans have the opportunity to reach their full potential. We work to reduce the impact of poverty, making grants of more than $25 million a year in the areas of strong communities, strong families, education, health, arts access and learning, and enhanced capacity. We, like many in the philanthropic sector, are examining the role of structural racism and access to opportunity. Support of this project furthers our understanding of this issue. The Aspen Institute defines structural racism as a system in which public policies, institutional practices, cultural representations, and other norms work in various, often reinforcing ways to perpetuate racial group inequity. It further notes that once these structures are in place, no one has to actively think about race, privilege, or discrimination for these systems to disadvantage people of color. Unfortunately, Chicago is a great learning lab for how these structures create, reinforce, and perpetuate racial inequity. As has often been noted, Chicago is a tale of two cities, with a booming downtown and thriving upper and middle income communities, primarily on the north side, contrasted by communities with concentrated poverty, primarily on the south and west sides. As the third most segregated city in the country, much of the poverty is racialized. WBEZ aired a story a few years ago about concentrated poverty in Chicago. While there are approximately 90,000 white Chicagoans living at or below the federal poverty line, there is no neighborhood with concentrated white poverty. Because of their ability to move freely, poor whites are scattered throughout non-poor neighborhoods. They do not experience what the Pew Charitable Trust calls the double disadvantage of growing up poor in a poor community. They benefit from better schools, jobs, and social networks that can propel their advancement up the economic ladder. Black and brown people, on the other hand, primarily live in concentrated poverty in racially segregated communities. These neighborhoods are not the product of impartial market forces. They are the consequence of decades of intentional, discriminatory public and private policies like redlining, restrictive covenants, biased implementation of the GI Bill that denied Black people access to capital and opportunity. This residential segregation drives the racial inequity that exists in Chicago today. It perpetuates educational, employment, health, and incarceration disparities, wealth inequality, economic disinvestment, and its related violence. Moreover, communities that were historically redlined have lower property values and higher rates of vacant properties today. Particularly germane to today's forum is the wealth gap. Black families currently have an average wealth of $3,600 compared to white households' wealth of $147,000. According to an Institute for Policy Studies report, it could take Black Americans as many as 228 years to accumulate the level of wealth white households hold. The denial of the opportunity to build wealth has generational consequences, as most Black people have not been able to transfer wealth to the next generation, like whites who have been able to pass on to their children the advantage they gained from government-backed wealth-building programs by helping them buy homes and pursue post-secondary education. While it is absolutely necessary to understand the historical policies that have fostered racial inequity, we must also be aware of what is happening today. At the peak of the housing bubble, many Black home buyers were offered subprime loans when they qualified for prime loans. A recent ProPublica analysis has documented continual racial discrimination in the mortgage market by banks, and an Urban Institute study of private capital flows to Chicago neighborhoods released last week and supported by the JP Morgan Chase Foundation, some of whom my colleagues are in the audience today, I think, revealed stark disparities by race. And on top of all of that, contract buying is rearing its ugly head. It is resurging. The research we will learn about today is important not only because it quantifies the negative economic impact of contract buying on Black families in Chicago, but because it helps to change the narrative about the creation of the middle class in the United States. It also dispels harmful myths about racial disparities that focus on individual behavior and cultural attributes rather than the unjust systems that produce inequity. As you learn about the amount of wealth that was plundered from the Black community in Chicago, I ask you to imagine what the South and West Sides would look like today if that had not happened. I also ask you to be open to the solutions that can repair this harm. Thank you.
Thank you, Deborah. Thanks for opening it up that way. My name is Janet Smith. I'm part of the team. I have the honor of introducing our research team. But before I do that, I want to give a special thanks and invite up to speak for a moment Karen Yarbrough, who is the Cook County Clerk, but at the time we were doing the research was the Cook County Recorder of Deeds. Last summer, she provided our researchers with a room at the Recorder of Deeds office and instructed her staff to help us with anything we needed. The red carpet was rolled out. We could tell tales, but and so much more. So we want to thank her because without her help, the data and things that are reported today couldn't have happened. So thank you, Karen.
Let me just add my voice to the voices I've already heard about how excited I am to be here today. I have such a deep admiration and appreciation for the work that's been done by Jack McNamara, Burl Satter, and her father, Mark Satter, and everybody who's participated in this research. Your work has a special place in my heart. As the Cook County Clerk, a realtor, previously as a state legislator and recorder of deeds, where I was happy to open up the county's property sale records to you all. When I read your book, Family Properties, it moved me deeply. And I had to meet Burl, and so Jack set that up for me. Jack is such an inspiration to me. His work has not stopped, and I don't believe it will ever stop. His passion about this work, and I share his passion. I truly believe in the power of home ownership and helping people to achieve their dream. Housing is foundational. It's foundational to stable communities, it's foundational to economic stability for families, and it's foundational to economic equity. I really get fired up when people are discriminated against, especially when they work hard, play by the rules as they've been told, and those with the power to help them see their dreams come true, they change the rules or just plain rip them off. Now, this goes much, much deeper than just home ownership and financial exploitation. If you want to disempower, disengage, and marginalize people, you take away their path to property ownership. You take away their right to vote. You take away their means to build wealth and an economic safety net. Now, we can change abuses like this, but we need to speak up, show up, and stand up. We all need to make sure that people know this history of this system of predatory housing contracts, and we need to make sure that this cannot ever happen again. Thank you.
Thank you, Karen. Another data source that we have to thank, I'm a data wonk, so I have to say this. A lot of the research happened at the National Archives, so it kind of went from the basement to just boxes of data somewhere else. But the National Archives also was really helpful with that, so I want to give a shout out. But what I want to really turn to is our research team. As you've already heard, Jack McNamara was an inspiration for all of us and really helped provide a lot of guidance and a lot of just knowledge beyond what this report shows, I think. But we had a wonderful group of students who started, about a year ago on this project? I remember we were all like happy and sunshine, talking about this work and just getting to know each other. So I wanted to introduce the whole team, and we're going to have then the research team that's going to present the findings that really did the analysis, or as I call them, some of the smartest people in the room. But I want to give a shout out, first of all, to some team members who did a lot of the data collection. Michelle Delgado, Maria Moises Temlin, Lena Townsell, and Nick Zettel. So they were students who worked on this last summer, but continuing the work, unpaid at times, thank you very much, but very dedicated. We have Sam George, Amber Henley, Jason Perez, and Alfonso Loyola. Please come up, and I'm going to tell you about them. So, part of the reason I say they're the smartest people in the room is because of the work they did. I wanted us to know a little bit about each of them. So first of all, Alfonso, who is currently a data analyst at Kids First Chicago. He has an MBA in economics from Loyola University at Chicago. If you don't know Kids First, it's an organization that crafts data-informed and community-generated policies and supports grassroots engagement to equitably improve the quality and funding and accessibility of public education in Chicago. I've seen a lot of his work when we were meeting back in January. Next, we have Amber Henley. She's recently completed an MA in Analytical Political Economy from Duke University. Her work includes the creation of a theoretical counterfactual called 40 Acres and a Mule, a speculative fiction based on General Sherman's Special Order Number 15. Talk to her about it. I want to hear all about it. But anyway, she's also, we're happy, she's come to Chicago now. She is currently the Fair Housing Testing Coordinator at Roosevelt University. Yeah, and we have Jason Perez. He is a math and computer science major with a research focus in economics at UIC. Before then, he was a community and labor organizer for Black Youth Project 100 and Service Employees International Local 73, whoop whoop union, sorry, working on equitable school funding and ending mass incarceration. And last but not least, I just lost my piece of paper down. We have Sam George, who is a recent graduate of UIC. Yes, that's my and an undergraduate in has his undergraduate in urban studies from our UIC. He's completed data and analysis projects with housing nonprofits, including Mercy Housing Lakefront, and was responsible for creating programming through a Bronzeville-based nonprofit for the City of Chicago's micro market recovery program. So you can see they're very smart people. How are you going to do this? Okay. Yeah, pull up the presentation. Thank you.
Do you know how to do that? I have no idea how to do it. So it was just click next. There we go. Perfect. All right. Sounds good. Okay, cool. Thank you.
Thank you. All right. Hey, everyone. All right, let's just get right into it. So what is a land installment contract? So we're presenting this in response to what the real estate industry says a land installment contract is, and what unfortunately a lot of scholarship, social science literature says what a land installment contract is. And their telling of it is that it's a pathway to home ownership. And even when you look in the past and like formal studies about like trying to measure Black home ownership, they consider housing that was under a land installment contract as Black folks who actually own those homes. So this is just some conceptual framing that we did. We got a lot of this from the Atlanta Federal Reserve, which did a study on informal contract housing today in the present time. Also Heather Way, who is a legal scholar. So a land installment contract is a financial instrument used by house sellers to sell housing in the informal housing market. The house seller enters a contract with the house purchaser, with the seller promising to issue a deed upon partial or full payment of the purchase price. And so for us, we believe that land installment contracts are part of an informal housing market. That's how the Atlanta Feds characterizes it. That's how more recent scholarship in economics and also in legal journals has characterized it. Here we're defining as home purchases that occur outside of the formal regulated mortgage market, where there's little regulatory oversight and limited access to legal resources, legal recourse, and where the law is ambiguous or heavily on the side of the house seller for contract enforcement. And so implicitly, what we're also trying to say is that markets aren't necessarily naturally occurring. They are the consequence of policy decisions that get put forth by politicians. So. And then the formal housing mortgage market is, what we understand is home purchases through the mortgage market, where purchasers and sellers have access to legal resources, third-party oversight, which provides secure and marketable titles to homes. The formal housing market exists in a web of third-party and government oversight federally and locally. The oversight covers areas such as deed inventories, sales and transaction databases, laws that mandate price appraisals, and inspections of the property for potential repair at point of sale. When you purchase a home in the formal market, the buyer has their name on the deed with a lien on it from the mortgage lender. There's, of course, equity, independent appraiser of the house price, and then interest rate in terms of mortgage set by the financial institution in light of creditworthiness. And so what we're contending is that informal housing market, especially as it relates to land installment contracts, do not have any of these protections, and it incentivizes predatory use and discriminatory use, and that it's in fact not a pathway to home ownership as it was billed back in the day, and it's how it's still billed today. So it goes by a few names: land contract, bond for deed, deed and trust, contract for deed. For the term of the contract, the house buyer receives no equity whatsoever as they're paying into it. The purchaser makes a down payment, regular monthly payments with interest over the contract term. Contract lasts anywhere from 15 to 30 years. The buyer in the contract is responsible for all aspects of the house, as in a formal mortgage, such as maintenance, taxes, insurance. The house price in terms of the contract is done by the contract seller, so there's no financial institution, there's no independent appraisers going in. And so this, we contend, leads to inflated housing prices and excessive interest rates in light of creditworthiness. And this is like a primary argument from particularly the real estate industry, is that, why we have to charge these rates is because, we're taking in so much risk, and that we are responding to like the lack of creditworthiness of the buyer. And so, what our research, we believe, shows, and what other research has shown, is that the contract seller is in fact taking on the least financial risk but receiving the most financial gain. And that financial institutions that usually the contract seller is working with, and the contract buyer are taking on the most financial risk with limited opportunity for equitable financial gain. And then the deed remains in the contract seller's name until the terms of the contract payments are met. But sometimes, a lot of times, that actually doesn't happen. And so it's subject to arbitrary forfeiture or eviction with no equitable resource to challenge the renter's or to challenge in the same way that renters and mortgage holders have. So, if the contract seller just says you got to go, they basically just have to go, and you can't really go to a court of law and actually have like legal standing to fight that. And then sale or transfer of installment contracts were not required to be inventoried by third-party or government agencies in Illinois until 2018. And in most regions still, there's no convergence around standards within the installment contract industry or regulation by government federally or locally. So, thanks.
All right, so I'm going to talk a little bit about basically our research process, how we collected our data, where we got it from. So I know you all are dying to know what we did last summer. So we started our research at the National Archives. So we knew that there were 2 court cases there. So one of them would be the Contract Buyers League versus F&F Investment, which we call the Old Home case or the West Side case because majority of those properties were actually on the West Side. And then Clark versus Universal Builders, which is the new home case. So these were new build homes, and those were also on the south side in the Chesterfield area. So at the National Archives, we combed through 73 boxes and about 50,000 documents over the course of the summer. What we actually found there was we found names and addresses that we could use sort of in gathering our data. So some other data points that we found were purchase prices, so the prices that contract buyers purchased the properties for. Addresses, as I said, sometimes we had the price the contract seller actually purchased the property for. In a few cases, we did find the actual land contract. So if those contracts have been submitted as evidence in the court case, we did have some examples of those. So in total, through this process, we came across 3,027 properties that were in the combined cases. So we also got some resources too from Jenner and Block. They actually handled the court case on behalf of the Contract Buyers League. This also included some additional documents, purchase prices, interest rates, as well as payment terms, contract length, and addresses. So we took all of those and went to the recorder of deeds with our addresses in tote. And that's where we went down to the morgue to actually find, it really was a morgue. So we went down there to find, but it was a good time though. It was a good time. So we went down there and we were actually able, with those addresses, to find property pins. So once we had the property pins of those addresses, we were able to get access to all the recorded data and documents that have been recorded against the property pin. Now, contracts did not have to be recorded. So in some cases, we actually did find contracts, but the most useful thing that we found there was actually the tax stamps. So most of these properties were actually put into what we called, or what is called a deed in trust. So once it was put into a deed in trust, we were able to find or confirm what the contract seller actually paid for the property by using the tax stamps to confirm some of the data we got from the National Archives. And then in addition, we also used Chicago fact books, so the big green books. In those books, we were able to find demographic data, so from the historical period, 1940s, 50s, 60. This included data on the neighborhood as they change it, demographic data, homeowner data, and this was also used in our analysis. So of the 3,000 or so properties that we found, we actually, this is actually a map of the 5 areas where we found most of the properties in. So those areas would be West Garfield, East Garfield Park today, North Lawndale, and West Inglewood and Inglewood. What's important to note is that you see the red dot. Each red dot represents an actual property that was sold on land contract, and the way that you can see on certain blocks how there are just blocks and blocks and blocks and blocks of contract properties.
And so yes, so as you can see, I mean, that was a sample. That's not by no means the whole population of it. So here we see how it pretty much matches up with where a lot of African Americans moved during the second Great Migration, which we see in this neighborhood in the west side, right? The red, of course, represents the concentration of African Americans. This is population, right? And also in the south side. On the right side, my table's a little messed up here, but it shows the net increase of homeowners, of African-American homeowners between 1950 and 1970. Actually, the 1950 and 1960 books, they defined them as non-whites, but it was 90-something% African-American, and the 1970 fact book defined them as African-Americans. So this is, we believe, an underestimated number. So yeah, so you see some of these neighborhoods exploded in African-American home ownership. Again, West Garfield Park, Chatham, Washington Heights, and so on. And so as you can see, going back to that point, is one of those big neighborhoods, right, where African Americans moved, we see a lot of these contracts selling. So what is it that we found after collecting all this data? So we did an analysis to calculate a race tax, again, what the African American contract buyer purchased over the market price. And there's three models that we did. And for those models, we ended up decreasing our sample size to 1,400 because of usable data. We did not want to make up numbers, but we did make some at least analysis estimates. And so the first thing that we find is that a comparison between the market price and the contract price was stark, right? And in this chart, if a property lands in the line, that means it's the same price. But here we see a huge increase in the property price. This is, again, inflation adjusted for April 2019. So that's the first component. This is just the price of the home. Then we wanted to see what is the real impact month-to-month basis, right, to African Americans. And what we end up seeing is that there was a raise tax of $599 for existing homes, or old homes as we called, because they were in fact very short contracts, and I'll show them in the next slide. Universal builders, or new homes, right, which is the south side case, it's a marginal increase as well, but there's also a raise tax there. And so here you see in this chart, again, same issue, is that if it's lands on the line, it should have been the same, but we see a lot of them, the vast majority of them, above the line. In the bottom table, you see that the incomes, adjusted for inflation in the nominal, and you see that at any given time of those 3 time periods, right, the home monthly payment, again, this is just a monthly payment, no taxes, no insurance, no repairs, and so on and so forth, is 1/3 of pre-tax income. So as I was saying here, universal builders had longer contracts. Again, this is a distribution of all the properties by number of months in the contract. And there's a little baseline to be able to compare to 300 to 360 payments, which would be an FHA mortgage. And you see that the universal builders is around that range, but the existing homes, it is absolutely like well below. Right? The upper whisker is barely hitting the 300 mark. And with that, we built another analysis to be able to see how many additional years they ended up paying for the home. Essentially, the only thing that we changed was the price between the market price and the contract price. All the terms the same. It ended up being around 8 to 9 years for those homes. So an 8 to 9 years additional paying for the home. In total, what we see is that this is the total raise tax, again, after adjusting for inflation, every payment, and when the home was purchased, the vast majority has a positive raise tax. And we calculated from the community fact books that there was 60,000 new black homeowners between 1950 and 1968. 1968, FHA mortgages started to be extended to African Americans. And we have 3 estimates based on research by Dempsey Travis, the founder of the Dearborn Real Estate Board, also by the Commission on Human Relations report in 1962, and then also an estimate by the Contract Buyers League And we estimated, we made an inference that if the weighted average for each home is $71,000 in raise tax, that the total raise tax will be between $3.2 and $4 billion overall over that 20-year period.
So we now conclude with policy-related recommendations geared toward ending the predatory nature of contract selling and optimistically seek to bridge the gaps caused by a history of such predatory contract selling here in Chicago. So first, we would look into requiring a standard for contract, which should include key items or key information, third-party appraisal, which is standard practice for mortgage purchases and an excellent mechanism to prevent price inflation by the seller. Disclosure of all finance-related rates, which would force the seller to disclose how much the contract seller is charging to be an installment in addition to the price of the home. This differs from how contracts work today, where the contract seller hides the finance costs within the overall cost of the house, and this should also include annual percentage rates. Public recording and documentation, which I believe Jason might have mentioned, in 2008, Illinois created laws to require contracts to be recorded, but merely as memorandum. So we suggest that they should be done for all contract transactions and include who has the deed, terms and conditions of the contract when it comes to financing, interest and price, and a record of payment. Transparency, which would require a seller to provide an annual statement of payments, how the payments were applied, and how much is left on the contract. In addition, there should be a clear and automatic method of deed transfer once a contract is complete. Provision of protections so that the seller and buyer would be protected in the event of an early termination that ensure equitable bargaining power. Creation of enforcement agencies through government entities such as the Consumer Finance Protection Bureau. And then finally, collect data to continue research and influence policy, which includes digitizing. Our recommendation is digitizing records at institutions like the Cook County Recorder of Deeds. So we hope our research and data that we've presented today drive important institutional and policy changes. One model is Jack McNamara's Restitution Homes, where he has a framework driven by a fourfold mission, which is sell livable houses to plundered and oppressed families below market value, finance them at below market interest rates, provide newly constructed homes and affordable restoration of older homes, and provide what he calls a restitution voucher to families who need it to keep their homes affordable. So please, he's on the panel, ask him about that. Invest. And on behalf of our team, we want to graciously acknowledge and thank Jack McNamara and the Contract Buyers League, because without him and them, there would have been none of this. And Jack was with us every day, whether we were in the basement of the Cook County Recorder of Deeds, at Jenner and Block, or at the National Archives on 71st and Pulaski. So we definitely want to acknowledge him, as well as urban studies scholar Lynn Saglin, whose work we leaned heavily on. She also investigated contract selling. Thank you.
Thank you. All right, so that's $3.2 billion to $4 billion, and we think that estimate is rather conservative. Imagine this, this didn't get mentioned. A house in Lawndale in 1958 or so is perhaps valued at $12,000 or $13,000. A contract seller comes in, a speculator comes in, he scares the white families, he buys the house, maybe that $13,000 house, he buys it for $12,000. Within a couple of weeks, or maybe even a couple days, he turns it around and he sells it to a black family for $26,000 or $27,000. The black family puts down a payment oftentimes of a $2,000 down payment. The down payments that did rival those who were in moving to the suburbs and were putting down, similar or lesser amounts of money on their home. So that markup right there is that that accounting over the years, if the contract comes to fruition, that markup then, has been pointed out as $71,000. And then over the course of all the homes that were on contract, from 75% to 95%, we're getting the $3.2 to $4 billion figure. And our communities, we believe, would look a lot different if that money wasn't just taken out of the community. It's more than just redlining. I mean, think about this. Redlining is the disinvestment of a community or the no flow of money into the community. Not only did that happen, that money did not come into the community for businesses and other kinds of, economic development projects for health of the community, but the money was taken out in an exploitative, predatory way, to a degree that we believe played a very, very large contributing factor to the destruction, or I should say, to the deterioration of so many communities on the south side and the west side. I produced a film, which is one part of a series to be called Shame of Chicago, a documentary series about the history of housing segregation in Chicago. The film, we hope, puts a human face on this tragedy and helps people begin to internalize and really get a deeper feeling of what the costs were. And hopefully, as more and more people see it, it will offend their values and it will enlighten them as to how we got to where we are today. So with that, we'll show the film. Following the film, I'll just have a few remarks and a couple of really important thank yous. And then we're going to move on to the panel discussion. The panel will be brief in their comments, and then we really, really want to hear from you in a wider discussion about what this means for Chicago, about the education that needs to be taken place if we're going to start to change the narrative of what really happened in Chicago during those years. So let's, I'm supposed to press a button here, okay? And, huh? Press the right one. Press the right one. All right, I'm going to be calling Greg soon. Let's see. Oh, no. That's just a pointer. Duh. This is a generational issue here. I got it. All right. Hey, thank you. There's a couple people I've got to mention here that really were pivotal in making this film. First of all, there's Clyde Ross and Ethel Weatherspoon. I don't see Clyde. Whoop, we're going over again. That's Elizabeth Wood, who headed up the CHA in the 1940s and 50s. She was dismissed when the old Richard Daley came into office, and over her trying to integrate public housing in Trumbull Park. And that's another part of this series, another story in this series that we want to be able to tell. But if we can turn that off. Oh, I have to turn it off. Oh, boy. Where's that button? This. Oh, okay. And then that. And then we'll just leave it there. All right. Is Clyde here? Clyde's not here. But Ethel's here. Ethel. All right. Another person that gets a whole lot of credit for this film is Burl Satter, who wrote the amazing book Family Properties. That story about Mark Satter and how the awareness of contracts came to be was totally buried up until you published it about 10 years ago or something along those lines. And talk to Pearl, there's an amazing story behind how she found out about it, because she was only 6 years old when her father died. And then, of course, we can't keep applauding too many times for Jack McNamara. All right. I want to thank Dr. Sandy Darity, who's going to be up here in a few moments leading the panel discussion, and Gwen Wright of the Samuel Du Bois Cook Center for their real generous support of this project. They've been behind it from the get-go, and their leadership and work for racial equity has been something of a model for all of us. And thanks to all my other Cook Center colleagues who are here today, who flew in from North Carolina. Raise your hand and maybe we can just thank you for being supportive. The project also has a powerhouse advisory board. And Mary Patillo is here today from Northwestern University. Adam Green, Sandy Darity is, as I mentioned earlier, Burl, and there are many other scholars who are part of the advisory board. And they're an inspiration and, really helped me figure out, how to maneuver through this story. Even though I, as a community organizer and someone who's had a lot of interest in this for many years, they're able to still give me deep research on this. And there's someone else who came in today. I really wanted to do this at around 2001 or so, and I got sidetracked by a number of other different projects and documentaries. And someone from the MacArthur Foundation gave me an exploratory feasibility study kind of grant, and that's Susan Lloyd, who was at the MacArthur Foundation back then. So that's really, the beginning of where, I started on figuring out, hey, I've got to do something about this. I want to tell this story. So thank you, Susan. So okay, I know you want to get to the discussion. So, but a few more comments. What you saw was just one episode in a whole planned series. So it's about 6 episodes, maybe my wife says 4 or 5. that will do a deep dive into other aspects of Chicago's history on housing segregation and its continuing tolls. And what makes today so profound to me, as I kind of touched upon earlier, as a born Chicagoan, is how proud and I move to stand with you who do the work of social justice day in and day out. And I know you're here because you want to do more about this history that we're sharing today. So by bringing this largely, I think, hidden history, misunderstood story to life, certainly outside this room, it is not all that well known. We hope to make it a tool in moving Chicagoans toward a common understanding and a genuine reckoning of our past. I don't know how else we need that foundation of understanding. We need that, and I'm hoping that we talk about that some today, because I don't know outside of this room if there's a greater awareness in the average Chicagoan of what took place in these years than there was in the 1950s. And the narrative that they have and the understanding of how things came about is a twisted kind of narrative that we would like to, through this documentary series and a lot of other work, it's just a small part of it, we would like to change. So we think no measure captures how powerful history has shaped our present. Inequality, racial inequality, and then the wealth gap. And I know I teach students documentary filmmaking at Duke, And they know this much about this history. And when I bring out the books American Apartheid, and now when I bring out books on Color of Law, it is a revelation to them. They need that information in order to understand the deeper roots of what is happening today in today's violence in black neighborhoods, in police violence, in all the issues, again, that you deal with. So we want to hear from you and how you think we can use this history to enable a better future, to start a better understanding of what happened. And we invite your input, and we're going to have a short panel discussion and then open it up to you for a real conversation. And it's got to be an ongoing conversation, a long-term, kind of project on how to get this new narrative out. Sandy Darity, professor of economics and African American history and founder of the Samuel Du Bois Cook Center on Social Equity, will be moderating the panel. And you have in your programs the panel participants. So we're going to dispense with announcing all their great accomplishments and just have them come up and start the discussion. So let's start the discussion. Thank you.
So good afternoon. I'd like to start the conversation by making some remarks about the Samuel Du Bois Cook Center on Social Equity, which is the center at Duke that I serve as director of. And I'd like to begin by congratulating Bruce Orenstein on this superb film. Bruce is an activist and a filmmaker extraordinaire, but I want to highlight his scholarship, which has been substantial in guiding the development of this particular project. He and his team of researchers have excavated the story of the contract selling scam in Chicago, and I think they provide us with a model for how this research might be conducted in other cities throughout the United States. And on this particular project, I think the archival research that they've undertaken has been vital. I first became aware of Bruce's work when I saw a series of short films his students had made on low-wage workers in North Carolina. These were 3 to 7 minute films, but the upshot of that was our agreement that he would join us at the Cook Center. And I think Bruce's contributions have been central to the work we do at the Cook Center. It is a fantastic benefit to our center to have a superb documentary filmmaker in our midst, and we are proud to have been among the producers of The Shame of Chicago and to issue the accompanying report that you all have. Our research center is one with a focus on understanding inequality and designing remedies for inequality, particularly intergroup or racial disparities. And one of our most significant projects has been the National Asset Scorecard on Communities of Color. Thank you. That's even better. Okay. And that's been the administration of a series of surveys on wealth among narrowly defined national origin groups in multiple cities across the United States. Those cities include the District of Columbia, Los Angeles, Boston, Miami, Tulsa, and Baltimore. And I will say, unfortunately, I've never been able to obtain a commitment to do a similar sort of study for Chicago. Let me also briefly mention some of the data and policy ideas that we have generated at the Cook Center that are pertinent to our conversation today. First, I suspect a number of you have heard the statistic that the median black net worth in Boston is $8. I don't know if you've come across that, but it's our study, The Color of Wealth in Boston, that produced that finding. In addition, Black college graduates who are heads of households have 2/3 of the net worth of white heads of households who never finished high school. Black parents who provide support for their kids' higher education have 1/3 of the median net worth of white parents who provide no support for their kids' higher education. The scale of Black business ownership in the United States is minuscule and prompts us to recognize that wealth drives business ownership, not just business ownership driving wealth accumulation. The total sales revenues of all 2.5 million Black-owned businesses in the United States is approximately $150 billion. Walmart alone has sales revenues amounting to in excess of $450 billion. Among the policies that we have developed that emanate from the work at the Cook Center include the federal job guarantee, the so-called baby bonds proposal or young adult trust accounts, the enforcement of existing laws that pertain to the provision of reasonable accommodations for maternal health, and in particular, our Associate Director for Research, Keisha Bentley-Edwards, who's back there, and sitting next to her is Imari Smith, and they are two of the people who have taken a leadership role in our research on infant mortality disparities. In addition, on the education side, we've been particularly interested in addressing within school segregation of curriculum and instruction. And Amanda Lewis, I'm not sure where Amanda is right now, but Amanda Lewis has done work on this subject in her book, Race in the Schoolyard, and in her co-authored work with John Diamond, Despite the Best Intentions. The final thing I'll mention as sort of an act of ego here is that Kirsten Mullen, my partner, and I have just completed a manuscript called From Here to Equality, which is on the case for reparations in the United States for Native Black Americans. I anticipate that the book will be out in February 2020, and so that's another policy area that has been one of close attention at the Cook Center, is the design of an actual reparations program. One final comment before I mention the panelists, and this is a pretty extraordinary panel, but one final comment is I think that there's some strong parallels between what has happened in terms of the predatory lending practices that are associated with contract selling and the way in which we have a racialization of student loan debt accumulation. I think there are some very strong parallels with how those processes have operated. So finally, let me introduce this extraordinary panel. First, Beryl Satter, who is a professor of history at Rutgers, and as you discovered, her book, Family Properties, is the central work that has been done on the contract buying scam. Next, Mary Patillo, who is aptly the Harold Washington Professor of Sociology and African American Studies at Northwestern. She is an expert on the Black middle class, and I'm not sure if that's going to come into your remarks today, but perhaps it will. Okay. Third is Adam Green, who's an Associate Professor of American History at the University of Chicago. And I think his work extends the Drake and Caton project on Bronzeville because he's an expert on mid-20th century Chicago. Jack McNamara, who is the hero of this game, who you have heard about before. And then finally, my friend Taz George, who's a senior researcher here at the Federal Reserve Bank of Chicago, who is an analyst of mortgage lending practices, both of the semi-legal and legal types. Okay. So Beryl, would you please start?
Okay, hi everybody. I was asked to just talk very briefly about my book, Family Properties, and how I came to write it. There was nothing about contract selling. There was a 1972 article in Atlantic Monthly. There was one dissertation written by a participant, Jeffrey Fitzgerald. I think it came out in '73 or something. And then there was a small study by Lynn Sagalin, which was in a, it wasn't a book. It was just an article. And that was it. And then, so my book's the first book about it, and it happened because of my father. Let's see, how do I tell this briefly? He died in 1965. I was 6, the youngest of his 5 kids. And I grew up sort of with the part that isn't in the film is sort of the toll that his struggles took on his family, which is something I grew up with, which was, he had clients who couldn't pay him, who didn't pay him. He worked for them anyway. He also had properties on the west side in Lawndale that he tried to keep up and had a lot of trouble keeping up, in part because the neighborhood around his properties was crumbling. And one of the things he was fighting for against exploitative contract sellers was for the community that he was part of. And he knew these people who were selling on contract. Some of them, they encountered each other. They didn't like each other, but he knew who they were, and they were from the same background, sort of immigrant background. He went one way, they went another. But in any case, he did take a stand against them, in part largely through a political vision, a left political vision that working class people need to stand together. Race is not a divide among people who are hurt by those with capital. Which was a hard position to take in the 50s in the big Red Scare that was going on. And because he was a self-employed attorney, he could take that position, though the FBI did harass him quite a bit. But he died when I was quite young, and I didn't really know who he was. And I had these articles, this one on the cover. This is actually from, you can tell it's cut and pasted. It's from a scrapbook that my brother Paul Satter put together after my father died. He went to my father's law office, took home boxes of cartons. He was a 16-year-old, very upset about the loss of his father. And he spent years, making these scrapbooks about my father. And a lot of all these newspaper clippings are from my brother's scrapbook. And that's what led to this book. I became a historian, and then I got curious about my father, and I started reading my brother's scrapbooks, and, I came across these horrible stories, and I was shocked and stunned, and I came to just what we've been saying. I read these stories, and I realized, that everything I had learned in graduate school was incorrect, which was that, again, the neighborhoods are abandoned. The business left, manufacturing left. Businesses didn't loan. It's all about letting it alone, and then somehow it sinks down. It's never about there was so much money to be made by corrupt practices. Well, not even corrupt. They were actually totally legal practices of flipping homes in this way. And that, the ultimate source of it all is federal policy that supports redlining. And then all these operators come in to take advantage of the desperation that the federal policies leave. And this is something that scholars like Mirza Baradarin and Richard Rothstein, and I say it, but a lot of people say it now, governmental policies created this problem. Governmental policies actually need to correct it. I'll just say I decided after I got tenure to, not before, to look into my father's story, and everyone said, don't do it, it's too personal, you can't do it, you won't be objective. And I was like, I think I could handle this, and so I did the research, and I wrote the story. And the book, Family Properties, the first half is about my father's struggle, and the second half about the Contract Buyers League, much like this. I'll just stop here and let our other brilliant panelists talk. I'll just say, the way I did the research was starting with these clippings. I would look up the names of the journalists who wrote about my father, because I didn't know where to start, because it had been so long that he'd been gone. One of them said, talk to Jack Egan, Monsignor John J. Egan, who was, people from DePaul should know about him, and everyone should know about him. And I called him, and from his hospital bed, he told me, call Jack McNamara. This is who will tell you the story of what happened. And so that's the trajectory. Okay, thanks.
So we're not going down the line. I'm next. So actually, I won't be talking about the black middle class, but I can in Q&A if that comes up. And I'm going to be short so we have time to open it up. I just want to make 3 points. The first is, while Ta-Nehisi Coates' conclusion was extremely powerful, I'm sure he would edit his own conclusion by saying, you know, we beat black people, and then we stop and say that's progress. And I know he would say we've not stopped. So the point is that, and it's been gestured to all along, that the kind of plunder that we see historically is the kind of plunder that we witnessed in the foreclosure crisis and that we witness in other ways. So I just want to do a shout out to a book that's going to be out in October. Kienga Yamada Taylor's book, Race for Profit, takes up this story in the 1970s. I think one of the risks of thinking about the federal government enabled this, and so the federal government needs to move us forward, is what she shows is how the federal government then turns it over to the same banks and real estate agents and insurance brokers and so on, who were so racist so as to not include black folks to begin with, and then say, hey, now there's this new market, please lend to black people. You weren't lending to them before, please lend to them now. And of course, they do it in a predatory way. And so she talks about moving from racial exclusion to predatory inclusion. And of course, we know that history. So shout out to that for the 1970s. And then much more contemporarily, the work I'm working on now is in a different realm, so not in the housing realm, but in the criminal justice realm, where I've been working on monetary sanctions in the criminal justice system. So we know the negative effects of mass incarceration and how those are disproportionately borne by black folks who are incarcerated at a rate 7 times the rate of whites. But in addition to mass incarceration, people are sentenced to do time in jail, but they're also sentenced to pay fines and fees. And this part of the monetary sanction of the criminal justice system keeps people ensnared in the criminal justice system for decades in cases especially of restitution, but surely for years. I was just today coding some of my interviews, and the parallels in terms of extraction, exploitation, and a paper that I've just completed, extortion, insofar as this payment is really extracted under the pressure of force, and that force is, of course, incarceration. That kind of extraction, which, given the racial disparities of policing and criminal justice, disproportionately is borne by black folks, is a contemporary moment of the same kind of plunder that we've seen in this film. So that's the second point I want to make. And then the third point I want to make is, while I'm not anti-home ownership, and I don't think that we should, and while I'm not anti-home ownership, I think we need to question home ownership as the most important wealth-building vehicle, and to think about, another shout out, Brian McCabe has a book called No Place Like Home, where home ownership is actually a way that whites protect their investments through the various kinds of exclusionary mechanisms that we see in this film and that many sociologists explore today. So home ownership as private property enables some of the racism and some of the wealth disparities that we see. And at the end, the reason for the nest egg is because we don't have societal nest eggs. Mm-hmm. So the purpose, or the requirement for having a private nest egg is because we don't have a really good functioning Social Security safety net. We don't have good unemployment insurance. We have exorbitant higher education costs. So all of the things that people are financing through their homes, and thus financing unequally because of disparities in home ownership, is because we have such a stingy and basically absent safety net. So challenging home ownership, by building up home ownership, we let the federal government off for building the safety net such that people don't have to privatize those kinds of safety nets. So I'll stop there and turn it to the next panelist.
So I think I'll also be getting out of my lane a little bit, maybe talking a little bit about the black middle class, but also I think talking about the period that I have greatest expertise in, the 40s, 50s, and trying to think a little bit about the kinds of stories that we tell so that those of us, other than Bruce, other than Burl, other than Jack McNamara, other than the student researchers, are thinking about ways to tell this story. There are two numbers, of course, that are very powerful that come out of the report. One is the aggregate figure, 3.2 billion to 4 billion, in terms of thinking about the amount of wealth that was taken out. And really, in a ways, that's the kind of direct lighted path to an argument about at least thinking seriously about reparations in relation to these issues. And I would underscore here that this is all happening, of course, in the middle of the 20th century, which means that the idea that reparations is something that has to do with slavery, reparations is something that happened long before I was alive, reparations is something that I have no responsibility for, is something then that you can really counter with this story by talking about this as something that is happening between 1950, 1970. I like very much Mary's word extortion, because you can't call it a crime. You can't call it theft. There's the protection of law. There's the enforcement of law making this policy work. Yet and still, it's something that's a crime at every level of meaning except the way that the law operates. So I think that being able to use that figure is important in terms of underscoring these things and all of the ways in which a wide range of actors, sheriff's deputies, doctors downtown, judges enforcing eviction orders, politicians saying there's nothing to look at here. All of those figures, banks denying credit in relation to black families, all of those figures are partners in relation to the story, as well as the predatory lenders. But I want to talk about the other figure. I want to talk about the $71,727. That tax, that color tax, that somewhere between 40 and 60,000 black families suffered as a result of contract selling between 1950 and 1970. I thought it was important to step back from that and think about that figure in terms of the kinds of stories that we tell. One thing we can say is that $71,000 in 2019 is 4 times the amount of median wealth that black families do. I'm guilty, along with a number of other people, throwing around a bunch of different figures in relation to the actual figure of African-American family wealth. I did it in the film. I'm going to use Professor Darity's figure of a median level of $17,000 as the one that seems to be most standard and most appropriate. So 4 times that is approximately $71,000. That's significant in terms of thinking about the difference that would have made to families in the 50s, the 60s, the 70s, on into the 80s, and of course their descendants through the period that we know as the urban crisis. But I think it's also important to try to break that figure down. I can't do it empirically and definitively. It would take a research project, perhaps a documentary film project, of interviewing people, for instance, who had been contract buyers and asking them, well, what kinds of life choices were you unable to make as a result of losing that money? Did you not have the opportunity to go forward with an operation in terms of an elderly relative? Did you not have the opportunity to send your kid to the college of your choice? Because, of course, the 6,000, I think, or 7,000, the 8,000 in 1960, the 11,000 in 1970 would have paid essentially for a year of tuition at any college in the United States and fees and board during that period. Were you in a position where you weren't able to deal with the price shocks that came up during the 1970s in relation to gasoline, in relation to rent or shelter, in relation to particularly energy, and ultimately increasingly through the 70s, medical care, which began to skyrocket in costs as a result of the advent of managed care and the increasing of coverage through Medicare and Medicaid and the need to sort of adjust costs upward. All of these are pressures that are extraordinarily impactful on African American families. For me, as a professor who has taught the history of African American Chicago for some 20 years, one takeaway I take from this is that I have to change my frame in terms of talking about the period after the 1960s. I think it was Burl who spoke about the kind of attractions of this deindustrialization thesis, that the moment that jobs disappeared, that's when the bottom fell out of black communities. And I think that this figure, this number, 71,727, the larger explanation that comes around it in relation to both the film and the report, the research that colleagues here and others are doing, and ultimately the stories of those who were victimized by this process. What it tells us is that it's not only work that disappeared in that kind of classic formulation of what devastated Chicago, wealth disappeared. And the fact that wealth disappeared was not just a kind of impersonal, institutional, structural anomaly. People deliberately moved that wealth, transferred that wealth from black hands to white hands. And I guess I'll close by saying that thinking about the wealth gap in relation to policy, in relation to the discussions we have about our knowledge in relation to this, in terms of the consensus we build in society, it's important to continue with that work. But I think a hard question perhaps that we need to ask today is practically, can we close that gap without actually transferring resources in a direct way? Can we develop our way out of it? Can we grow our way out of it? Can we educate our way out of it? And I'm really taking research from Professor Darity in relation to this. We have to ask ourselves that question to have a serious, meaningful conversation about the wealth gap in relation to policy. Thank you.
One of the things that I enjoyed about this research project was the fact that I learned a lot of new things about contracts and the communities by doing it. The most significant thing that I learned was something that I don't think too many people have talked about, but in Lynn Saglin's dissertation, she did a study of forfeitures, of the how many forfeitures there were among the contracts. And she did those that fell before 69 and after 69, which is unimportant here. What was significant was that 83% of the people who bought on contract, so we're talking some 50,000 people or close to it, finished their contracts under extremely adverse conditions. Compared, one of the models that we worked on a little bit was to compare what the contract buyers were paying and over the period and what the situation was for FHA white insured mortgages that white folks were given. And for example, the 18 years was the average number of years on a contract, whereas the FHA mortgages were all 30 years, or most of them were 30 years. The difference in the monthly payment was something like 260 or 70 for the contract buyer, as opposed to 85 for the, and this is for the same price house, and same interest rate, et cetera, for the FHA mortgage person. And the there was one other, doesn't make any difference right now, but the important thing I thought was that I asked a banker friend of mine what the foreclosure or default rate was in normal lending institutions. And he says for a normal lending institution, it's between 7% and 12%. So with African Americans under extremely adverse conditions, completing 83% or only having a 17% default rate, in my opinion, really busts a lot of the myths that we have about Black folks, particularly in terms of hard work, in terms of stamina over a couple of decades, and it also tells us how important home ownership or family was, that they would go through that for such a long period of time in order to make that happen. And I found that to be one of the real astounding things that I discovered. I'd like to just talk briefly about what I see as what I'd like to come out of this effort. And the first is that I think we need, and it's been referred to before, we need to have a change in the public consciousness, that we have to go from thinking of what the dominant culture does for African Americans as not being welfare but restitution. This money that has been stolen or legally stolen, or however you want to refer to it. My economist son lectured me for saying legally stolen.
Not this one.
He was okay with legally but unjustly taken. I felt we got somewhere. I think that getting to the point of thinking that we're paying back what we have as a debt, we're not doing charity, we're not doing being do-gooders. We have a debt that we have to take seriously and do something about. And my first thought is if we're going to do something about it, even in this process, we're talking about having to raise $4 billion. So, but even if you said $1 billion restitution fund, that would get people's eyes to roll, because when I mentioned it to Karenina Grimble, who's from the Woods Fund, at an event the other night, she rolled her eyes. And I said, I don't think it's a question of whether we do it. I can't think it's a question more of a real challenge of how we do it. And it's something I think has to be done. I think that has to happen in two ways. And part of what has to be done is revitalizing the neighborhoods in addition to providing restitution to individual families. And the individual families would seem to me to be falling into a couple of categories. One would be descendants of contract buyers, obviously. A second group would be people who are currently living and maybe descendants but don't know they are, as Ta-Nehisi Coates was a descendant of a contract buyer, which he didn't know till his mother told him after he published the article in the Atlantic. And then the third group is so we don't commit the sins of the past or repeat the sins of the past. We've got to make this available to anybody who is in a position of not being able to afford housing and would like to move into these oppressed areas so that they will get the same thing. And by affordable housing, I've been to too many talks about affordable housing where I have the developers who talk about affordable housing strike me as somebody who has found a niche where they seem to be making a lot of money off of providing affordable housing. And I think the only definition for affordable housing is the one, if you're sitting before a banker, he's going to apply, whether he tells you you're going to get a loan, and that's 25% of your monthly income for principal, interest, taxes, insurance, and mortgage insurance. And you can go up a little bit if you're going to include gas and electric, but that 25% has to be the criterion, and we have to somehow make up the difference between that. And what also occurs to me is that not only we got to find a way of doing it so that people end up with some equity at the time that they close on those deals, and that we get the percentage of home ownership. And we've done some recent research on owner-occupied housing in neighborhoods on the west side, and we're in the 30% to 40% range. And they tell me that you need to be at 65 or 70% in order to have a stabilized community. So I think we have to make it possible for the renters who are getting killed anyway, should be able to be transferred into home ownership with a restitution kind of element. I also think, and I'll keep quiet, is that there are flawed policy programs or flawed public policies that have to be dealt with. FHA was obviously one of them. That's somewhat taken care of. Redlining and zip coding is another one. Bank discrimination is another one. But then we have a flawed system for charging insurance in premiums that are designed to punish the poor. At the time of the CBL 30-year reunion 20 years ago, people brought their homeowners policies and their automobile policies. And what we discovered was that at the time I was living in Evanston, I was paying $1,000 a year for a car insurance, and my coverage was $300,000, $500,000. The people in Lawndale and the West Side were paying $600 every 6 months for coverage that was $20,000, $40,000, which is no coverage at all. And and now they're charging insurance rates on the basis of your credit score, which to me means insane. I was shocked when we moved our sausage company from its factory when we got gobbled up in a TIF, which is another, from Chicago to Evanston, and our insurance premiums went down, our health insurance premiums went down. It's crazy. I mean, there was no difference in where we were living or anything. So all these public policies that we take for granted and somewhat accept, I think are things we've got to be examining and dealing with. And I think that the way to start is that most of the communities that we're talking about on the west and south sides have developed plans for their futures. And I think that the first thing we've got to do is start talking to those people and find out what their plans are and what their dreams are, and then begin to fashion something along the lines that would be meaningful for them.
Hi, everyone. So I just want to build on something that's been alluded to a couple times today, which is that land contract or contract for deed sales actually remain prevalent today in many communities. And in a lot of ways, they bear resemblance to some of the elements that were described in the documentary and in the report from the research team here. In particular, in terms of the lack of protections for buyers from eviction and forfeiture, the inability to accrue equity, and above market pricing. It's also common that these properties are in very poor condition, and in some instances, the contracts even put the onus on the buyer to bring these properties up to code. There's also some evidence of racial targeting and targeting of immigrant communities by corporate contract for deed sellers. And so this is something that a number of researchers within the Federal Reserve System have focused on recently. Myself, along with co-authors from the Atlanta and Cleveland Federal Reserve Banks, we obtained about 300,000 records of contract for deed sales from the past 15 years, concentrated in 6 Midwest states. With the goal of learning more about the terms of these contracts and the types of neighborhoods and populations where they're occurring. We found a few things that I think, again, bear resemblance to some of the findings of the report and to this historic work. One is that these properties are frequently smaller. They're frequently smaller dollar transactions than what a mortgage would typically cover. So I think the connection there is that we're talking about a gap in traditional mortgage markets that's not served by traditional mortgage products, and these contracts are in some way filling that gap. And in terms of the neighborhood characteristics where these are occurring, we find in our research that the census blocks that had the largest concentrations of contract for deed sales had a higher share of Black and Latino households than our sample overall. They were predominantly low-income neighborhoods. And also one of our strongest findings, even after controlling for other factors, was the level of housing market distress of places where land contracts are occurring is quite remarkable in terms of higher vacancy rates, again, low home values, and very limited access to traditional mortgage products. And I think this kind of speaks to some of Mary's comments as well in terms of how we're filling this gap in a way that may be predatory, not actually helping to supply credit to places that aren't finding it from traditional mortgage products. And so I just think it's important to note that as we discuss sort of the legacy of this activity, the fact that it remains present, and I really liked the sort of policy proposals that the Duke team mentioned, and I hope that our research and your research brings more attention to this among policymakers, because it's certainly something that hasn't fully been grappled with even today.
I'm suggesting we start talking about education and new narrative and stop talking about how bad contracts are and all everybody's, you know.
Oh, okay.
That's all. Well,
Okay.
anyway, that's.
Do you want to make this comment? Just make the comment.
Okay.
And then we'll have
Yeah,
questions.
so I'd like to open up the discussion to how valuable education might be in regard to all these issues, how valuable changing the narrative might be, and should Chicago be working in towards that direction? I know some of you are. I know, for example, Natalie Moore and the work that she does at WBEZ, the book that she's written, and other things along those lines are to try to lift up a certain awareness among Chicagoans, to build a constituency, an educated constituency, then can then envision some of the needed changes that we're talking about here. And so I was hoping maybe we can move the discussion a little bit in that direction as well. But that's, so I toss it out to anybody in the audience, or I toss it out to anybody in the panel to address that question. What do we need in terms of education? Or do you not even see education as a needed factor in all of this?
Yeah, go ahead. I'm sorry. Thank you.
Good afternoon, everyone. One of the gentlemen mentioned education. That's the key. It doesn't matter what happened in the 60s and 40s. I'm actually a member of the Chicago Police Department. And of course, we have a new mayor and the issue, as they mentioned, about violence. You have to educate people. Certain people are not going to be saved. That has to be known. Theories are not going to work. If you don't want to put a Band-Aid on the issue. In reference to the black community, I love everybody, but in reference to, you would say, my people and the black community, you have to tell them, you have to show them. You can't even blame. It doesn't matter what the predators do. It doesn't matter what predatory lending, it doesn't matter about that. Because the slave master is not going to make you the slave or the slave master. He's not going to make the slave master. It's not, it has happened, it's not going to happen today. You have to be honest with yourselves. I brought this for a reason. It's 7 a.m. It's a documentary, 7 a.m. That you have to, everyone should go to their, whether it's a nephew, your cousin, your family, your friends, your neighbors, and say, sit down with me for an hour and 2 hours and watch this. There's another documentary called Hidden Colors. It's 4 parts. Number 5 is coming out. I'm just going to conclude that if you're serious, people in this room, and if the black community is serious, which is number 1, they have to be serious. It doesn't matter. Again, the slave master is not going to make you the slave master. He's not going to show you the way. It's not going to happen. It's not going to happen going forward. Period. Period. That's all. I love everybody. We got a new mayor. I'm going to say that again. And then that's it. That's it.
Yeah, please.
All right, I hope this mic is on. I've hit something. There's a red button.
Yeah, you did.
Yeah.
We can hear you.
So my name's Kelly Carter. I am a loyal, maybe, native Detroiter, but an even prouder citizen of Chicago. I fell in love with this city. I have family here. Some of my elders on this side of the family branch, I think this is a part of their story, even though this is the first time that it's really hit me. And so as I've been learning about the political landscape in Chicago, unlike Chicago, Detroit, we don't have aldermen. We've had a corrupt city council that sits high, looks low. And so one of the things that's resonating with me is where were the aldermen, right? But then also, as we talk about how to move forward, are they the appropriate soundboards, change agents, I don't know, right? For this message to be taken locally into the neighborhoods in order to help with that revitalization process. Like, what are your thoughts on that?
So let's try this strategy. Could I take 4 questions, including that one, and then ask the panelists to respond? And Hunter Adams has his hand up. Go ahead. Yeah.
Turn the light on. Hi, my name is Hunter Adams III. I'm president of a small educational foundation called the Royal Circle Foundation based in Baltimore.
You need to use the mic.
You need to use the mic. People can't hear you. You need to use the microphone at your seat.
Can everyone hear me now? My name is Hunter Adams III, president of the Royal Circle Foundation, a small foundation based in Baltimore, office here. I want to thank Professor Ornstein for that very powerful film. It brought back a lot of memories for me personally. My mother took me as a child to that march with Dr. King, Lorraine Adams. My father bought a house in Chatham on the south side, but he actually got a mortgage from the VA. However, he paid the race tax as well. So my question is, perhaps Professor Green or someone else could answer, was that looked at for people who actually got mortgages, whether FHA or VA? Thank you.
Yes,
On
please.
the race tax.
Yes, please. Yeah.
Hi, my name is Ori Pennick, and I'll try to be quick with my question. Native born, technically never left town, grew up in Inglewood, and I'm gonna give a little history here because I think, or I know, that we cannot group all African-American communities as the same. They're not. The South Side is different from the West Side. We used to even dance differently. But the issue of Inglewood is particularly of concern, where I was raised there, and I will age myself. I went to school in a Willis wagon, and I know that at that time, in the 50s, there were over 100,000 people there. The second largest business district in downtown Chicago, with 3 grocery stores, including the National, A&P High and Low, a Weibo store, and I can go on. So all I want to say is we are left with less than 30,000 people there now from the issue of the wealth disparity. There is no symbolism of investment, economic investment. When I was there in Inglewood, I could break a fingernail and get another job across the street, and after school jobs, they were plentiful. I say all that to say that when we look at structural issues around racial segregation and housing, your piece about the disinvestment, the wealth disinvestment, is crucial to have in a strategy of rebuilding. And quite honestly, I call, and forgive me, I call Inglewood Detroit, and the north side of Chicago, Manhattan. And my daughter on the north side has been gentrified out of 4 communities that I used to call Ravenswood growing up, that are all different things now, from Lincoln Square to a whole bunch of other stuff, that you don't have to gentrify people in Inglewood. You could build till you get tired because there's nothing there. It's an empty lot, and lots go for $1 an acre, and they're being bought by out-of-state developers. So all I say, and I bring this as a Chicago girl, we cannot have one strategy that we assume will do it all for all of us. Lawndale is blessed to have investment by Staines and others that have kept that community sound. But Inglewood has been blessed being the home of the first African-American female alderman, which is why when Mayor Daley said you'd pay, he didn't lie. We did pay for that. And Harold Washington's office. We have to not forget history, and I said this to Nancy Stevenson, and I'll say it again. I was appointed to the police board by Harold Washington, helped to bring in Fred Rice. All of that structure that was put in place then does not exist now. So unless we understand history and on whose shoulders we stand, we repeat failures and we don't learn from lessons learned. I encourage all of this to be the endowment and the education part of it, of lessons learned. What did we do right the last time and what do we need to repeat? What did we do wrong that we don't never need to do again? Because if we keep treating this as it's new, we will never have a solution. It is not new, it is different. And we need to have different strategies that encourage that understanding. And you researchers are amazing, but when I go to talk to young people in Inglewood, they don't want to know that my mother had a 10th grade education and I got 3 degrees. They don't care, and that's right. Because what they're going through right now, there is no way my mother could bring me out of Inglewood from a Willis wagon to 3 degrees, including a law degree. So all I can say is everything what we're doing now is essential, but we have to do it with boots on the ground, people in the community who can take it, and Bruce is right, from an education, and I don't mean, as my mother said, initials behind your name. I mean grassroots education, so you can encourage people to understand how they can work and what they can do to better their lives and demand that the structure adhere to that. And that's
In studying where money could come from for reparations, does anyone look at the amount of money that is going to the so-called affordable housing developers who are actually making a lot of money? Properties that were contract buyer buildings are now mod rehab, where they're getting money every month from HUD, or they're owned by institutions that have low-income housing tax credits, so they're giving government money, or they're owned by landlords who rent to people with housing choice vouchers. So the idea that there's no money to provide housing for this community, I think, is a fallacy. This money could go instead for home ownership and not for people who are still extremely easily evicted.
Give it to them, yeah.
So could I ask the panelists to react to the 4 comments that have been made, please? In whichever order you'd like to comment.
In the past, the aldermen were, in the period that I wrote about, in the 50s and 60s, a lot of them were in on the Plunder. They were close to real estate guys, so they would step in and find a way to write up a house that had some violations, to put a little extra pressure on the owners. But that may, that was the past. Hopefully it's changed. But it's a complicated question. It has everything to do with, the machine and how it's changed or hasn't. So I won't say anything else.
I'll just have one reaction to the point about Inglewood, which is very well taken, and especially your point about needing boots on the ground. But I will caution that the statement, that in Inglewood you can build for years and years and don't have to worry about gentrification. One lesson that we need to learn, that we have learned in many neighborhoods across the country and in Chicago, is the need to plan early so that when Inglewood does become prime real estate and hot property, that the folks who live there now can benefit from it. So that's, I just want to, and I just want to amplify the point that you were making. Part of the way to do that is to foreground the work that folks who are now in Inglewood, that they are doing to improve the neighborhood, to build on the assets that are there. But their work needs to build in protection of the vacant land such that they are in community ownership hands as opposed to, again, extractive hands, because the day will come when it will be no more $1 lots. And the planners will say, we can't build affordable housing here because the land is too expensive. And the folks who did the initial work will be, as is this scenario in North Kenwood, where I've done my research, where the planner told the residents, you are victims of your own success. That day will come and it needs to be planned for.
To reinforce your point, Harlem is no longer Harlem.
Right.
Yeah.
Yeah, I'll just say quickly, I don't have a detailed answer, can't really do justice in relation to the question about the VA and government agencies in relation to imposing a color tax or a race tax. I think we just have to obviously be very vigilant in terms of understanding the variances, the adjustments, in terms of thinking about how the adjustable rate mortgage is something, of course, that's an important vehicle in the private sector, probably not something that's being used in relation to government, but fees, terms in relation to people having to pay in relation to code violations, obviously something that's been very important in terms of Section 8 vouchers and people moving in the city more recently. I think at some level it tells us, to kind of maybe riff a little bit off of Jack McNamara's point, comparing Evanston and Lawndale, that zip code is destiny. And that the ways in which responsible institutions, so-called, as well as predatory lenders, use that to advantage in relation to being able to work their margins, minimize their risk, is probably one explanation for why that tax is so widely applied outside the world of contract selling.
Any other comments?
Is Rob Rose here?
Oh,
So, you know, I've read Family Properties, and I loved the documentary. What I felt like it didn't do justice to is the role of the city. And I wonder, Burl, if you could just talk a bit more about just the racket that happened with contract owners and bringing out the building inspectors and actually sort of cycling these evictions very quickly and saddling these contract buyers with maintenance and code violations that they weren't expecting. Because I just feel like, you know, that connection to this sort of city-sponsored process is a really important one for us to think about when we think about restitution.
Okay, so Beryl, you'll have the last word from the
And
panel.
Joanna Trotter with the Chicago Community Trust, sorry.
Now, we've got to go ahead,
Well,
proceed.
Yeah, but I mean, you know, it's a big, complicated system where a lot of people are making a lot of money, and that includes people, you know, in the city administration. And yeah, I go into it in a lot of detail. I mentioned about aldermen being close to developers or contract sellers, not even developers, who, there's also, you know, bank involvement. I mean, some of these contract buyers, or sellers, I'm sorry, the sellers were financed by savings and loans that sometimes they co-owned, or they had very close friends who, you know, gave them these, you know, these loans that they then gave big kickbacks, and then some of this money circulates back to kickbacks to aldermen who talk to city inspectors who write up violations that were not written up when the contract seller owned the home, but were immediately written up when the buyer purchased it and tries to subdivide the apartment to make the money, to make the payments. So, I mean, I kind of don't want to waste the time in some ways to go into it, but, you know, if it wasn't profitable, it wouldn't continue. I think that's one of the big points of a lot of the research people are doing, is to talk about profit, you know, that there's a lot of profit in this kinds of exploitation. It's not about abandonment, you know, it's about extraction of a lot of wealth, and the wealth permeated through the professional classes and the political classes. And I think maybe Jack can talk about that a little bit too, if you recall.
We're actually going to have to stop.
sorry.
That's what I was trying to say.
Sorry.
Okay, so I want to thank the panel, and and I would like to ask Natalie Moore to close the event out, please, for us.
Good afternoon, everyone. I just wanted to share a few thoughts about the report. I did a story that aired today, one that aired this afternoon, and a web story. And one of the responses was, let's just print out this report on cards and carry a pack to hand out to anyone who opens their mouths about race and poverty in Chicago. And I want to highlight something Alfonso told me, one of the researchers. He said, if this is treated just as an academic paper, then we have failed. Bruce also told me the scaffolding of segregation gets built after the race riot of 1919 in Chicago. And I've been doing a lot of research about the riots for a project I'm working on. And I want to read a couple of gems that I found, because when we talk about housing, we have to go back to the Great Migration and those riots. So this was published, a letter to the editor, anonymous, signed by a righteous citizen, but I'm going to put white citizen, in one of the papers. Anyone who has motored down 35th Street and Grand Boulevard recently noticed a marvelous change. Most of the beautiful homes on the north end of Grand Boulevard and on South Park, Calumet, and Prairie Avenues are now occupied by colored people, where 2 years ago there were none. Thousands have moved into much of the best part of the South Side. Something must be done. The governor and the mayor should first declare martial law and place policemen and troops throughout the district in sufficient numbers to preserve order. Second, the governor and the mayor should issue a joint proclamation notifying all colored people east of State Street and set a line north to move west of this line within 30 days. Meantime, the legislature and the city council should pose a zoning law prohibiting colored people from buying or renting property east of this line and imposing a sufficiently large penalty upon real estate men and owners to stop them from leasing or selling to colored people. This would work the greatest good to the greatest number. The colored man is entitled to full protection under the law. Under the law, he is entitled to equal opportunity, but he has not right to crowd in where he is not wanted when there are plenty of other places where he can be happy and unmolested. Colored people who have bought property in these districts will find plenty of purchasers as soon as they are removed, which will not be confiscation of their property. The city or the state should pay the expenses for their removal. The owner of real estate now rented to colored people will find his property sufficiently increased in value to compensate him for the months it may remain unrented during this adjustment. Happiness is attained where there is no strife, and the colored man will find it where he least antagonizes those around him. A week later, on August 6th, after the riots had stopped, Alderman Terrence Morgan introduced a resolution proposing the establishment of residential racial zones for white and colored people as the only real and permanent solution to Chicago's racial problem. Whereas it is the belief of the City Council that many causes of difference arise out of the fact that each race has certain prejudices arising from social causes, which prejudices are more apparent where the property rights of races become involved. Whereas the City Council believes that many causes of friction can be removed by an intelligent and equitable separation of the races. Therefore, be it resolved by the City Council that a commission composed of members of both races be formed for the purpose of investigating the causes of the recent riots and to ascertain if it is possible to equitably fix a zone or zones which shall be created for the purpose of limiting within its borders the residence of only colored or white persons. Mayor Thompson ruled the resolution out of order. And I found an editorial from the Chicago Defender that said, it doesn't matter if you have a racial zone, people are still going to discriminate. So what happened is that city officials organized the Chicago Commission on Race Relations to look into the root causes of the riots and find solutions, and nothing was done. But what did happen was lay the path to redlining, restrictive covenants, and contract buying.
Okay, well, thank you, everybody. You know, it's a continuing conversation for us. I'd love to be able to take the video or the documentary around the different communities to spread the word on it, as well as the report. And, you know, continue the discussion, perhaps expand the discussion to do documentary about what Natalie just talked about, and then place it on the windshields of every car in Chicago. Okay, you know, I wish we could have had a little bit more conversation, but we can do that in other settings, I'm sure. I hope that you walk away with something that's of real value, and that can move your own work forward. And And then finally, and best of all, we're having a reception from 5 to 6, right outside the doors here. So there's going to be some food and wine and beer. And let's, maybe to continue the conversation there. Again, thank you, everybody. Really appreciate it. Bye-bye.